This is the seventh and final part of my stock market in-depth analysis that will conclude in a detailed trend forecast for the whole of the remainder of 2018. However, the whole of this analysis and concluding trend forecast were first made available to my patrons who support my work. So, to get immediate first access to all of my future analysis and trend forecasts, then do consider becoming a patron by supporting my work for as little as just $3 per month. Formulating a stock market forecast. Now to the hard part, which is to convert all of my analysis into a trend forecast for as far distant into the future as I can reliably conclude. Now, the overall emerging picture from my analysis is one of a market stuck in a trading range with an upward bias. The key question is whether the Dow can break higher out of the trading range or not. Technical analysis including Elliott Wave suggests yes, whilst the likes of the presidential cycle says no. Furthermore, a choppy trading range makes trend projections problematic. It's not easy to say when a swing will top or bottom, just what the overall direction should be. So in terms of determining a trend, then an obvious trough for the stock market would be during October, which would likely be coming off a September high. Then that downtrend during October would need to bottom by mid-November so as to set the scene for the expected December Santa rally. That could just see the stock market at least challenge its all-time high. Therefore, my Dow stock market forecast conclusion, as illustrated by the chart, is for the Dow to target a trend towards Dow 26,000 by mid-September, following which the market should correct during October that could retrace all of the move from August to mid-September, which would then set the scene for a Santa rally to start during November and continue post-Christmas that would target a new all-time high at approximately Dow 27,000. And peering into the mists of time, a trade war induced China financial crisis coupled with a weakening economic indicators such as the narrowing in the yield curve towards inversion does not bode well for the stock market for 2019. So perhaps it would be wise to lighten one's stock holdings during this forecast Trump rally, just as proven to be wise to have dumped Chinese stocks earlier this year. This forecast conclusion was first made available to my patrons on the 21st of July 2018. So to get immediate and first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for as little as just $3 per month, and ensure you're subscribed to this YouTube channel for new videos.